Good day, ladies and gentlemen. This is Barry Norman on behalf of Elvexo and Investing.com, and welcome to our webinar on the European Union and Brexit and the upcoming effects, or where we might be going forward from here and how this might affect the financial markets. Because we know, especially if you're living in London or you trade the FTSE or you trade the pound, it is the talk of the marketplace. Now, tonight's class is brought to us by Elvexo, who is a leading online trading provider with an outstanding platform, and they are a regulated provider, so therefore I'm required to give you a risk warning. Trading CFDs and Forex trading, as well as most types of investments in the free markets, carry risks. You should always be aware of these risks and assess them properly. If you do not understand the risk, consult a professional. Do not trade or invest until you understand what is at stake. Now, Elvexo is a regulated provider for Forex broker and investment company. They offer assets from around the globe, and you can trade safely on their platform using their web trader or their MT4 platform. They are one of the most advanced platform providers out there with an extreme offering. It's the best offering you can get. They have real-time quotes, one-click trading, all order types. You can use pending orders, use limit orders, and control your risk. They have high speed execution. They have robust security. It is one of the best web traders you can find. Also, you can use the MT4 platform, okay, and they also offer you exceptionally good, accurate signals, free of charge to all of their traders. Now, tonight we're going to be looking at what is going on in London since Theresa May triggered the Article 50 back on the 29th and 30th of March. Now, in recent months, we've seen expectations adjust, first to the referendum results, then to all the news, and then to outlook monetary and fiscal policy, and then the short-lived conservative leadership contest. And then we had the announcement of a new PM and cabinet, then the prospects for a second Scottish independence referendum, and the reaction of EU politicians to the referendum outcome. All of this has been changing the markets up and down because the markets are now trading more from headlines than they are from anything that's actually happening. And all this has been captured in large swings in the financial markets. Now, this has been an unavoidable feature of the modern global economy. Markets will continue to extract signals from every move that might improve or detract from the clarity of the next steps in the evolving nature of the EU-UK deal. Okay, so to be honest with you, there is virtually no way to predict what's going to happen to a particular stock, to a market sector, or to the pound. Okay, only because none of us can predict what headlines are going to hit. And we're going to see so many people fighting for headlines. We're going to see so much negotiation. And while we have to understand, and we'll go into the explanation of what is going to actually go on. But a lot of times things are said as negotiation tools. They have nothing to do with what the final outcome will be. Sometimes they have nothing to do with what reality will be, okay? But they are part of the negotiations. And then you also have politicians who will be seeking headlines at all times. And, you have different times that you'll have, comments from the Bank of England possibly. You'll have comments from Mario Draghi and the ECB. These are for more reliable people, but you'll have all types of people that are involved in the negotiations, seeking headlines and seeking to improve their negotiating standpoints or make their own points. And then, of course, you have the Scottish, the Irish, the Welsh, and all the other people that have something to say about what is happening. So the process is likely to continue for a number of years. The years of negotiation followed by a future period of upwinding economy and policy arrangements with the undoubtedly controversies, political difficulties, progress setbacks, all being played out on an hourly basis will mean that volatility will be a feature we will have to live with for some considerable time going forward. Okay. Given this, exchange rates and stock prices are likely to deviate substantially from fundamentals, sometimes for significant periods. The instability will itself act as a further drag on Scottish and UK growth. It implies a less productive use of resources at a macro level that would otherwise have been the case. Now, we're going to see everything from, let's take the politicians out of the case. Let's take the banks out of the equation. You're going to see companies, or the big financial companies that say they're moving part of their headquarters. You're going to see companies that are international companies thinking about laying off people and juggling for maybe tax breaks, commitments from the government, all kinds of things, because nobody knows what the outcome will be. Now, we have to understand how these process will move along. Okay, so on the chart on the right, we can see here on the 29th, the UK invokes Article 50. They signed the letter and it was delivered, I believe, on the morning of the 30th. This triggers a 2-year time limit for negotiations. That's a long time. Oh, I'm sorry. Somebody says I can't see the chart. I'm sorry. I didn't realize my screens weren't moving forward. Hold on a second. Let's see if we can fix this. I'm sorry. I've been going through screens steadily since the beginning. Okay. So we have here on the 29th, we triggered that. Then we have a 2-year time limit. Now, what's happened is nobody has ever gone through this before. So even though we have a 2-year time limit, we don't know what steps, and there's no pre-described calendar for what steps have to happen when. Okay. And now what's going to happen is the EU is going to be taking a very hardcore stance, while the UK takes a very hardcore stance. Now, behind closed doors, they may be easing on those negotiations. They may be giving little bits, but the UK politicians need to see like they're in control and demanding the most. The EU not only needs to seem like it's like a divorce and the lawyers getting involved. Okay, we'll get a settlement sooner or later, but the fact is the EU has to also make sure that its other members don't think this is an easy process, so they decide to consider leaving the EU. They decide, oh, the UK was able to leave and they were able to keep everything that was good to them in place and get rid of these things. So we'll do the same thing. We don't want that happening. So what we're moved to is right now the remaining 27 EU countries will meet on April the 29th to discuss withdrawal. Okay. So the next big thing will be the 29th with big headlines coming out. But what will happen is after we return from the Easter break or Easter Monday, so next week, we're going to see a lot of headlines with people positioning themselves. You also see a lot of people talking off their back, having no intricate knowledge, no basic knowledge, and they're going to, you're going to hear this source said this, and this one heard this, and that one sort of, you know how it is. Okay. Then after the EU meeting, the UK and the EU will begin negotiations. Whether they're going to sit down once a week and talk, whether we're going to have 10 people have conferences, whether they're going to be flying back and forth, we don't know. Okay. They're going to move to some draft deal that they can put in front of the European Council's 27 leaders somewhere in the next 2 years. Okay. Now, this council needs approval from at least 20 countries with 65% of the population. Okay. So even though that they may reach an agreement, okay, it still has to go to a vote, and that has to take place in less than 2 years. Then it has to go through the ratification of the EU Parliament before it's accepted. Then once they accept it, okay, the UK so the UK has to introduce this stuff and get it approved by Parliament now. Okay, after 2 years, negotiations can be extended if all 27 countries agree, but if not, EU treaties cease to apply to the UK at the 2-year mark. So we have this 2-year deadline. It can be extended, But again, it takes a big vote of all 27 countries saying yes. In the meantime, you're going to have the Scottish people pushing for their referendum over the next 2 years. Okay. Then we come down to step 4, and then we have the final departure between the UK and the EU. Okay. There's a lot of stuff that's going to go on, a lot of unknown. And can you imagine? Just think about all of the different parts that have to be negotiated. Because yes, we could just have a divorce and the EU goes back to what it's doing, the UK goes back to what it's doing. But then what happens is business stops acting, banking stops, everything stops, because without some type of understanding and signed agreement on each one of these items, okay, if the UK says they have no agreement, and the UK says tomorrow, we just want a divorce, we want to be done with you. Well, then they have no trade agreements. They have no border control. They have no nothing. Okay. They need to discuss citizens that are living in the UK, citizens that lived in the UK, families and children of citizens. This is just people that are just on visa, people that are working in the UK. You can't just destroy everybody's life. But on top of it, you got to discuss customs, clearance, international trade, banking. Every one of these has to be covered in some type of negotiation, all to be rolled into one great big package. So on the plus side, more often than not, once the uncertainty is resolved, the impact turns out to be largely transitory. So once we go through the volatility, once we get a final deal, it's like, look, the markets got volatile leading up until the Brexit vote. Then they crashed. They went crazy right after the vote. But then after all that was passed, everything kind of went ham-ham. There was no market reaction on the 29th and 30th after the letter was triggered, the Article 50 was triggered. The world didn't fall off the end of the globe because everybody was ready for it. Everybody knew what was happening. Theresa May's been telling us for months and months when she was going to send it. And now the hard work is beginning. But for business, consumers, and EU workers in Scotland and Scottish workers elsewhere in the EU, the current economic uncertainties are exasperated by policy uncertainty. The policy uncertainty is arguably much more damaging. Okay, so we're going to see the Scots pushing for this referendum vote. It's not going to probably happen because the EU can't negotiate. For Scotland, it's one thing for the EU, for the UK to leave as a body. Scotland trying to leave the UK and then become its own Scottish part of the EU. First of all, what's made it more easy is because the UK never went into the euro. The Scots don't have an independent banking system and they depend on the pound. Now you think if they want to withdraw, they're going to let the pound still be their currency. So this becomes a lot more complicated when you stop to think, well, I live in pounds. I have pounds buried in my backyard. Everything in my store is priced in pounds, and I can't use the pound anymore. It's a foreign currency. So, we have lots of things that are not going to happen, most likely. But it's getting complicated out there. Okay. So, are we going to have a hard or a soft Brexit? It's going to be a negotiated Brexit. Okay. But again, it's like these superstars in their headlines. This one's divorcing her husband. So all of a sudden, for people that were out of the press for years, all of a sudden they're making all kinds of press headlines with their allegations because all they're doing is negotiating where they're, trying to get an upper hand. Now, the prime minister, though, is in a very tough predicament. She's trying to deal with the EU. She's trying to appease all the voters in the UK. She's trying to appease Parliament while she's trying to keep the Scots on board, while she's trying to keep the EU, Ireland and Wales happy, because they're all kind of part of the UK. And it's like, I wouldn't want to be in her shoes at the moment. So the next big thing we have to look at is the EU meeting on the 29th of April. Okay, this is going to be the first bit of hardcore information we get. Okay, so whilst the European Commission responds to the letter with a hard line by stating that would first seek to secure everything that is in the EU's interest, such as the rights of the 4 billion EU nations living in the UK against the 1.2 million British citizens living in the EU, as well as demanding an agreement on the 50 billion pound exit fee before any negotiations can begin. Okay. Therefore, immediately began by blackmailing Britain, which acts as the warning shots across the bows for any other EU states that may contemplate breaking free from the European superstate. Okay. They are taking immediately a hardcore action. Okay, but it's just tactics. And before the week was out, Donald Tusk delivered the EU's own 85-page letter written in Eurospeak listing demands from each member state in the EU's favor before the EU will consider negotiating anything in Britain's favor, such as access to the single market, as my following translation illustrates. 1. No separate negotiations between individual member states in the EU and the UK. Agreement on an estimated upfront 50 billion exit fee before anything else can be negotiated. The rights of the 4 million EU, the people. Poland's even demanding UK social benefit payments continue for Polish nationals residing in Poland, such as child benefits. Spain demanded that Gibraltar be returned to Spain as part of the exit fee. I mean, these are just crazy. But again, we're talking about superstars getting divorced. So the game, the great Brexit game is about to begin, where on one side of the United Kingdom and on the other side is the rump 27 members state EU, desperate to give the aura of permanent stability and unity. Having spent the past decade teetering on the brink of collapse, as the Eurozone went from one crisis to the next, leaving most of its member states in an economically crippled state, as Germany increasingly calls for economic and political shots. The EU bureaucrats fear the Brexit domino effect, as Britain's exiting leaves behind a deep void that the European Union is likely to be able to fill the fundamentals of the vast EU. Now, remember, we're going to see headlines. They're going to affect the markets. Okay. And they're going to have a major effect on the markets. Okay. But we can't predict what they are. But we're going to start hearing more and more comments from the German central bank. And we watched this happening during the Greek scenario. And during the Greek scenario, we saw all kinds of fighting between the Greeks and the Germans, making headlines, sending the euro up and down day after day. Now, we haven't heard much from the German bank, central bank, but we'll start, and all these countries will be throwing these things out. Okay. So it's hard to predict what the financial or what the effects will be, or the rippling effects during this point on the financial markets. Okay. Now, what we have is a whole bunch of stuff coming up. Now, once Brexit negotiations are down towards the end, okay, we can then start looking at the fundamentals and predicting where the pound should go, where the FTSE should go, where stock market should go. Okay. But in the meantime, what it says, it's going to be very, very hard. Okay. Even trading the pound can be very risky, because everything might tell you, all your analysis might tell you the pound's going to go down, and it can shoot straight up because of some headline. So in the ongoing, or the interim, the EU will be part of the UK, and the UK will remain part of the EU with all the rights and obligations until the withdrawal agreement enters into force. So for the next 2 years, there's not going to be any change to anybody on a political basis. So what we're going to watch for, again, is the headlines, but we're also going to watch for how companies, international companies, are starting to react. Are they shifting bodies? Are they shifting jobs? Are they closing down EU headquarters? Are they opening up split headquarters, one in the EU? Are they moving all to Ireland? What are they doing? This is going to have an effect. We need to watch these comments because they can't wait for the 2 years to be over and then start scrambling. So we're going to see them take position. We're going to see, like most banks are going to start opening up headquarters, a European headquarters and a UK, instead of the UK headquarters being both. So they're going to end up splitting their labor forces. Now, what issues might be on the negotiating table between the European Council and the UK? This goes on forever and ever. They've got, like I said, they've got to negotiate everything and anything. Now, even though the EU is prepared to outline its terms of negotiation almost immediately after May triggered the 50, the figuring out the specifics of the withdrawal agreement is likely to take longer than 2 years. Many diplomats and experts think it would actually take closer to 5 years, and a lot could change in that time. Because moreover, since the UK waited so long to actually trigger Article 50, there has been no discussion, at least publicly, about what issues will be on the table. Negotiations will not begin immediately, but sometime this summer. Overall, it's important to remember that the EU very much has the upper hand. The UK choosing the leave, and it is one of the stands to lose everything from the higher levels of social protection to free movement across Europe to access to education and jobs. This is not a divorce involving two equal players, but a departure from one country from a union with 27 countries. The EU will continue on with business as usual, and its goal is to ensure that the harm to EU citizens from the UK's departure is minimized. Article 50 simply provides a path for the process by which the UK will exit the EU. Okay. The deal refers to the terms governing the new post-Brexit relationship between the EU and the UK, of which a trade agreement is a critical centerpiece. If no new deal is agreed before the UK leaves the EU, trading terms will default to the WTO standards, which are significantly less beneficial for both sides. Now, the UK Parliament, now if you remember a couple of weeks ago, everything went through the courts. Courts ruled that May had to submit the Article 50 through Parliament, get their approval. Now, everything Parliament will have a final say on all the negotiated terms. Okay, so the UK Parliament will have a right to veto the final deal, but not to suggest amendments to it, effectively leaving politicians with a take it or leave it option, just like they have with the vote, either in or out. So the thing that we're watching for that might have a big effect is we're going to lead up to the next general election in the UK, which is until 2020. So we have 3 years that May is in office. Okay, but this could shake everything up because we have till March of 19 to exit the article, to exit the EU, but we're also into political season and re-elections. Also, the government could collapse between now and then, just like David Cameron resigned. All of this will have an effect on the markets. So what about the economy? Inflation has risen to 2.3% in February, its highest rate in 3.5 years, but unemployment has continued to fall to stand at an 11-year low at 4.8%. Annual housing prices increase has fallen from 9.4 in June, but we're still at an inflation busting 7.4% in December, according to officials. Now, this is a problem. Okay, if we have inflation growing, housing prices going up, and the pound going down, this has a very uncomforting effect on UK home buyers, because your house may be, soaring up in value, but the pound, it means foreign buyers can't get into the marketplace because the pound is way too weak, making the price of a house way too high in their currency. Okay. Now, we also, like I said, have to deal with all the headlines that are going to come out of Scotland. So as recently as last month, a repeat of Scottish independent referendum seemed improbable, but that ended. Okay, and they're pushing hard. Scotland's First Minister Sturgeon says she plans to trigger another independence referendum as the United Kingdom marches towards Brexit. Sturgeon said the vote could be held in autumn of 2018 at the earliest. Scotland voted to remain part of the UK at the referendum in 2014. Okay, now she's juggling for position also. Okay, she's going to juggle for the UK to give Scotland as much as they can get out of this deal without holding a referendum. So again, Sturgeon will making all the headlines she can make over the next couple months. Okay, and keep rattling the cage, because she's also taking political position. When asked whether she would allow a second referendum, May told reporters, "We had the independence referendum in 2014. The Scottish people determined at that time they wanted Scotland to remain part of the UK. So it is the final choice of the UK government to allow or to call for the referendum." So we see that the pound has continued to fall against the dollar. The pound has continued to weaken against the euro. Okay. But we think the pound has bottomed out. We think 123 or thereabouts, between the 123 and 125 is the range that the pound will most likely remain in. Okay. Against the euro, we're expecting to stay about the 85, 86 range. Again, at its lowest point. So really, ladies and gentlemen, some people are telling me they have no sound. Everything on my sound is saying there is, everything on my side is saying there is sound with no problem. So I don't know what to tell you. It might be your internet provider. So we're almost done anyway. I don't know. Okay, some people are telling me they have sound fine. So the few people that have lost it, it's their internet, not mine. Okay. Now the question is, how many balls can the UK or can the UK government juggle at one time? But again, it's going to be, like I said, headline after headline after headline. I don't know how to suggest to you to take positions. I don't know how to tell you to trade anything at the moment. As we get farther into this, maybe there is a way to find some type of recommendation. And I don't think anybody knows, because the thing is, I could tell you the pound's a good buy, okay? Except, can you cover the swing in the markets? With the market volatility being based on headlines, you could get stopped out, or you could just be killed on just a swing over a 3-day period when the pound returns to where it is because Boris Johnson said something. Okay, so this is where the thing comes in. The UK is going to be fine in the long term. So if you're looking at stocks like B&Q, or some of the big builders in the UK, they're going to be fine in the long run. So you can buy individual stocks, long-term investments. You can buy on bottoms. Okay, but trading is a whole different story, and I don't know what to tell you. Okay, now Goldman Sachs says the pound could have another 10% to fall. The pound, which has already dropped to a 31-year low against the dollar, has much further to fall, according to a new research by Goldman Sachs circulated a few days ago. Goldman analysts Robin Brooks, Sylvia Arjanda, and Michael Cahill argue that the sterling is actually still overvalued by about 10%. So I'm calling the sterling at 122 to 125. They're calling sterling at 120 to 122. Okay. Now, many currency models have illustrated that sterling's massive crash since June 23rd means that it's cheap, and I think the sterling is very cheap. Okay. Now, I do think the dollar is going to regain some footing, and as the dollar does, it'll push this, the pound farther down. But I think if you can grab the pound, if you want to trade it for a longer term trade, as the dollar strengthens, it'll go down and buy it at the bottom and sit on it. But that means you have to be able to afford to sit on it. So sterling has been trading in a very narrow band this year as traders look for more clarity before putting on new positions. The pound still looks under pressure, particularly as some of the economic data has begun to deteriorate. Retail sales figures for January were much weaker than expected, and it now seems that consumer spending has begun to slow, which would be terrible news for the UK. So politics rather than economics are driving the currency markets at the moment, and as we appear to be moving towards a hard Brexit and perhaps alienating our largest export market, traders are understandably nervous. Political uncertainty may well reduce capital spending, which would also be a negative for the pound. So once negotiations begin in earnest, it may become apparent just how far apart the two sides are, and that could be the catalyst for the next reduction. One caveat is that if a quick and robust agreement can be made, then the short covering would be extreme and the pound could soar aggressively. It is just as likely that no agreement will be reached and the UK could walk away after 2 years of negotiations without any deal. However, if the markets thought that were likely, the pound could head towards parity. Okay. So again, it's the next day that's crucially important will be the 29th. So between the 17th and the 29th, you're going to see lots of headlines. Okay, if you want to trade the headlines, something peaks up the pound to 127, 128, maybe you want to sell it. Okay, but again, you have to be able to cover the swings of the marketplace. The FTSE is a different story entirely. And I just don't know what to recommend. Okay, that's the most earnest answer I can get. I mean, we're all sitting back and clearly watching for where this is going to take us. Clearly, the uncertainty is not boding well for the pound, but could see the same impact on sterling as when the Brexit vote was announced. Personally, I think the difference this time is the markets are getting ready for Article 50 compared to Brexit. And as we saw last week, there was no market reaction. Brexit came as a real surprise to the financial markets. Therefore, although I think we could see some problems for the pound, I think the losses will not be as big as last June. Longer term, I think once the European election begins to take place, I think we could see the pound make gains. Okay, now that's the other thing. We have to keep a close eye on the French elections, because as we see that unfold, that could weaken the euro, which will give the pound a leg up. Therefore, if you need to buy euros in short term, it may be worth buying them to avoid the uncertainty of what may happen after Article 50 is figured. If you don't have a full availability of funds, but you want to lock in an exchange rate, then it may be worth buying a forward contract which allows you to fix an exchange rate in the future. But otherwise, sit tight for a week or two. So thank you very much, and I'm sorry about the audio, and we'll talk to you again. But watch those headlines. Trading the news could be very successful, but you have to figure out your strategies. You have to protect your risk at all times. So have a great night now, and we'll talk to you again real soon. And have a good holiday season. Bye now.